Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. What a volatile day it really turned out to be for the market. We slipped below that 21,750 mark, but we saw a very smart recovery. Although we've cooled off from the day's high, but we managed to end above that 21,800 mark. Even for the Sensex, it managed to reclaim that 72,000 mark in today's session. Mid and small cap end of the markets were fairly range bound, although they were off day's low. And sectorally, Nifty Bank continues to be under some bit of pressure. But if you look at some of the other pockets that were doing well and giving support to the index were autos, FMCG, realty, oil and gas. These were among the sectoral gainers today. On the flip side, metals, banks, IT and pharma. So, IT and pharma were under a fair bit of pressure yesterday as well, and today as well we've seen some bit of pressure extending in today's session. Aside of that, if you look at some of the top movers on the index, of course, Eicher Motors, on the back of a double upgrade by UBS, we saw a very good 5% kind of an uptick there. Maruti hit a fresh high, crossed that 12,000 mark in intraday trade. Nestle, Power Grid, ONGC, SBI, Reliance Industries, which was among the top contributors to the downside yesterday, once again, rebounded and saw a 1.5% kind of gain. On the flip side, you had Tata group of stocks not doing all that well. Tata Steel, Tata Consumer, Tata Motors, all of them were among the top losers on the Nifty. Aside of that, some private banking names like Axis Bank didn't do well, and as I mentioned, pharma names like Cipla were also under pressure. Even if you look at the Nifty 500 losers, Tata Chemicals was the top loser there. It came out of the F&O ban today and saw an 8% kind of a downtick. IFL Finance, Tata Investment, Torrent Power, which saw a good up move until recently. It has come under pressure today. On the flip side, Metro Brands, Rainbow Child Care as well as Praj Industries, these were among the top Nifty 500 gainers. But to understand the texture of the market, we have the all-important Fed meet outcome that is due later tonight. What to expect from that? What could be the messaging from the Fed chairperson? And how our traders really position themselves in these volatile markets. To get a sense of that, let me bring on board my guest for today. Joining me is Rohan Shah of Religare Broking as well as Gaurang Shah of Geojit Financial Services. Great to have you on the show, gentlemen. Let me start with you, Rohan. It's too much volatility, right? I mean, we slipped below 21,750. Once again, we came to above 20. In fact, we even reclaimed 21,900 at one point. But there's extreme volatility. How does one really position themselves? Also, the fact that we have weekly expiry tomorrow.
Yeah. Thank you, Nandita, for having me on the show. So yes, rightly said, we have been witnessing a very high volatility in the past 2-3 sessions, and the Nifty has been declining after hitting all-time high. And in this process, it has given a breakdown from its short-term moving average, that is 20-day exponential moving average. And from past two sessions, it has been making an attempt to break below its 50-day exponential moving average and its previous swing support that lies around 21,800 to 21,850 mark. And also looking from the sentiment per se or from a breadth perspective, it has been deteriorating from past couple of sessions. And if you look at the overall textures, the stocks which were weaker are getting more and more weaker, and the stocks which were doing well, now we are seeing sort of breakdown of the support from the same. So overall, we have maintaining a sell on rise view in the Nifty till it is holding below 22,250. And on the level front, any breakdown below 21,800, it will open the way for 21,500 and then 21,350 mark. So this is some of the view which we are currently moving with the Nifty.
All right. Gaurang, great to have you on the show. Good afternoon to you. But would you concur with the sell on rise strategy now? Would you say that, from a buy on dip, it has become largely a sell on rise market? And of course, we have the all important Fed meet outcome today. Rates are going to be on hold. But what is the kind of messaging one should expect from the Fed chair?
Thank you, Nandita, for having me on the show, and good afternoon or good evening, early evening to all of you all. It's good to see you after a long time, of course. So on the markets, Nandita, I would definitely differ over here. I don't think it's a sell on rally. That depends upon what your view is on the market and what kind of time horizon you are looking at. Next couple of weeks and months till the time election is done and dusted and the result is out, the choppiness and volatility is only going to go up. Not to forget, we are also virtually at near that all-time high that we have seen very recently. Today, actually, if you go to see, the volatility was quite sharp. There was almost about 220 points volatility on the Nifty. The low was 21,710, and the recovery took us to 21,930. So you can imagine the kind of choppiness and volatility that is there. And this view we have been expressing for the last couple of weeks, that as we near the election, choppiness, volatility will be the spotlight, be it in terms of domestic triggers, be it in terms of global triggers. A rate move by Bank of Japan has also surprised a lot of people after almost about 17 years. Fed chief statements would take its reaction possibly tomorrow, and the global markets and our markets would react to it. But given the correction, Nandita, I think it is time to look at some long-term investment ideas. Very soon, we will see a curtain raiser next month by first, second week, April, fourth, and the last quarter of this financial year. That would possibly give us some color, some direction, depending upon how the numbers unfold. So I am not really concerned about the correction that has come in. And mind you, it has come in after a significant amount of rally also, led by the regularity issues in the mid, small cap and micro cap universe, which the regulator has flagged off. So it might cause a little bit of more pain. But I think it is time to cherry pick large cap first, then selectively, sectorially mid cap and some certain small cap stocks.
Right, when you say that be selective, which are the pockets you're alluding to? Because, a lot of chatter about PSUs as well, right? Street is now divided about where PSUs are headed. One
Yeah.
section believes that, this is a good correction.
So
There
I
could,
would say that
huh.
PSUs,
Right, go ahead.
so it is a healthy correction. I mean, see, if you were crazy about buying stocks at 22,500 or 22,300, at 21,800, I don't see any reason nothing materially has changed. There are events which are causing the kind of disturbances in the market, and let's give it every 5 years when we have general election, markets react like this. And for us, the problem is that we are at all-time high when we are approaching an election scenario, and it's going to be the second largest election phase after independence. So you will see volatility. As far as your question, to answer your question on PSU stocks, we like PSU stocks with banking, we like PSU stocks with defense, we like PSU stocks with power generation, we like PSU stocks which are related to infrastructure, we like PSU stocks which are also into oil marketing and oil exploration. So that's the universe that I would possibly look at and start cherry picking over there.
All right, Rohan, coming to you, over the last few sessions, we've seen, fair bit of sell-off coming in on OMCs, right, especially after the fuel price cut. But would you say that there's been a trend reversal on charts, or would you say, that was a good entry point that this correction has, kind of brought about?
Yeah, so if you look at the specifically Hin Petro and BPCL, there has been sort of a trend reversal pattern formation on the peak, that is a head and shoulder pattern, and it has given a breakdown the last week. So as of now, it has also declined gradually from last couple of sessions. So it might be a sort of breather, and we believe it would be opportunity to exit from the ongoing trade because we are expecting further up decline in these both HPCL and BPCL. IOC has been relatively not doing much, but comparatively BPCL and HPCL on the charts are looking weak, and we can expect further decline in this counter.
Right, Gaurang, I want to talk to you about Eicher Motors. Of course, autos were, in top gear today, so to say. Maruti clocked that or crossed that 12,000 mark for the first time. We'll talk about Maruti in just a bit. But Eicher, there was a double upgrade that came in from UBS. From neutral, it has been, upgraded to buy, and a good 5,000 rupee kind of price target there. But of course, we saw competition concerns weigh in on share prices of Eicher. It has underperformed its two-wheeler peers by quite a big margin, right? The likes of Bajaj Auto and Hero, they've done far better when it comes to the two-wheeler pack. But now, would you say that competition concerns were a little overstated? And going forward, the kind of valuations Eicher offers is much better compared to peers. So, would you look at a case for investing into Eicher now?
It has been people's favorite motorcycle, Royal Enfield. And if you recollect, Nandita, it was not longer back when the duo, that is Hero Harley and Bajaj Triumph, launched the rivals. stock was trading at 3,400. On fallback of that announcement, went to I think 3,100 or even 3,000 rupees, and now see where it is. So that's the kind of confidence that we had in Royal Enfield motorcycles, Eicher Motors. Not only they are into motorcycles, they have a JV with Volvo. They have commercial vehicle business also, which is doing quite well. Our sense is that, let me give you a blanket coverage. Other than Escorts Kubota, Nandita, we have coverage on almost all manufacturing, two-wheeler, three-wheeler, passenger vehicle, commercial vehicle, including an EV manufacturer like Electra Green Tech. And given the kind of policies that the government has unfolded very recently, the EV policy, and going further, bringing India to possibly number one or number two position in terms of overall manufacturing activities. Today's announcement of JSW and GM, MG, is also an opportunity to look at auto sector with renewed interest. And I think any correction you get in the market would be a great opportunity to nibble into not only auto focused stocks, Nandita, I would say auto ancillary OEM, something like CIE Automotive or even Uno Minda, even tire manufacturing companies, battery manufacturing companies. You have to put all these three together and look at the sector.
Right. What about Maruti? Of course, in the EV space also it is taking giant strides, right? And when it comes to CNG passenger vehicles, there as well it has the lead. CLSA has also come out with a note saying that Maruti is expected to continue with the lead here, and CNG passenger vehicles are anyway on the rise. So here on, do you see more upside, or do you think that all the good news is already in the price?
So firstly, a disclosure, we have been covering Maruti right from its consolidation of 5,500, 6,000 levels. We still maintain a positive view on Maruti. It was sad to hear from the management that they are not interested in EVs when the earlier stages of transformation was taking place from ICE to EV engine. But then they also came around and saw what the consumer wants. And they finally decided to step into EVs, and possibly mid 2025 or late 2025, you might see an EV coming out from the shed of Maruti. I was listening to the management commentary this afternoon on your sister channel, CNBC Awaaz. Very impressed in terms of the launches that they've lined up, new launches, and of course the launches that has been happening in terms of new avatars of the existing models. Hybrid vehicles have been doing extremely well, and from a 10 to 12 lakh price tag, they have moved up to about 20 to 22 lakh price tag. So that's the kind of pricing power they command in terms of existing models as well as new launches.
Yeah, indeed, you're right. They were quite late to the EV party, but now, of course, they are scaling it up in a big way. But Rohan, after today's move on Eicher, would you say that it has the capacity to actually turn out to be a breakout stock? And on the charts, Maruti, how are you viewing that?
If you look at comparatively both the charts, Eicher and Maruti, so definitely Maruti has been relatively outperforming the Eicher motor. And on the level front, Maruti, we are expecting 12,500 zone to be tested in the 1 to 2 months, and any decline towards 20-day exponential moving average or any intermediate support would be a fresh buying opportunity. And now coming to the Eicher Motors, just a disclaimer, we have also covered this stock as our newer pick, and the stock has been trading sideways on a technical front. So any trader who is looking for resistance, the first resistance comes around 4,000. Any break above 4,000, then we can see a momentum emerging in this counter. So as of now, 4,000 is a resistance level to watch out for.
All right, that's the resistance level to watch out for. But Gaurang, I want to talk to you about LT Foods. There's been fund action in the stock. In fact, LT backers asset managers have picked up nearly 1% stake. And if you look at the company per se, the earnings track record has been pretty good. If you look at the price to earnings ratio, it's at 10x or something, which is fairly good and attractive, so to say. Would you see, or do you see a compelling case to invest here?
So in agri play, rice exports is the basic business. And let me give a disclosure. Every Monday, we come out with a market outlook, weekly market outlook, and we give two investment ideas from a long-term point of view. So this Monday, out of the two investment ideas, first one was JSPL and the second one was LT Foods. And with the kind of action that has happened today, Well, I think it's going to be a very interesting play, Nandita, from a long-term point of view. And not only is the domestic market robust for companies like LT Foods, but also export market is equally robust. There have been issues in terms of certain geographies because of certain news flows and certain consignments getting rejected. But I think overall there is tremendous amount of growth opportunity over here. So we maintain a positive stance on LT Foods as of now.
All right, positive stance on LT Foods, and it looks good for a longer term investment play. But if you look at the charts, Rohan, how is it stacked, at least for the short term?
So yes, for short term, the stock has made a good attempt from its support zone. That is 150, 160 was a good support zone for the stock. And this week we are seeing the stock has been rising gradually higher. So on the very short term perspective, we can expect a up move towards 191 and a breakout above 191. The next level comes at 210. So yes, definitely a good buy in terms of risk reward as well, and in terms of on the chart perspective as well, it's looking very good.
All right. Tata Group of stocks, Gaurang, I know you like TCS, you even like Tata Motors, but of late, ever since, there are reports that Tata Sons may not come out with an IPO, we've seen some of these stocks take it on the chin, right? Case in point is Tata Chemicals. Tata Chemicals saw a very good run when, of course, this Tata Sons IPO, the report came out and people thought that the IPO will be coming out soon. But ever since then, we've seen issues, right? But even business-wise, soda ash prices and demand has been falling, right, for Tata Chemicals in particular. How are you looking at Tata Chemicals? Do you think chemical stocks should be an avoid right now? Or would you say that Tata Chemicals actually looks good for the longer term?
So let me give you sector, and within the sector, certain stocks that we cover on. So in Tata Chemicals, we have a sell recommendation, Nandita. Targets somewhere close to about 900. Primarily being the targets that we had set aside on the fundamental side has been achieved. So we have come out of the sell recommendation. Overhang in terms of Tata Sons holding adjustment percentage, minor adjustment here and there to avoid the public route can put additional pressure going forward. God knows when, how, and in which form, and in what quantum. So Tata Chemicals is a sell. TCS, Tata Motors still remain on the buy side. Tata Power is also one stock that remains on the buy side. On the chemicals, specialty agrochemical side, Nandita, what we like on the positive side is Pidilite. UPL, it has been a point of pain for us, but we still maintain a positive coverage. Vinati Organics, PI Industries, and Aarti Industries. These are some of the investment idea in the specialty stroke agrochemical business. But let me say one thing, a recovery in business and translating that into earnings and that finally reflecting upon the stock price is going to be pretty long.
Right. Of course, there has been issues with chemical stocks, but experts have been maintaining that China plus one will play out for chemical stocks going forward. But Rohan, on the charts, among the 2-3 Tata stocks that we spoke about, TCS, Tata Motors, in fact even Tata Steel and Tata Chemicals, anything that's looking an attractive entry point right now?
So from the Tata space, Tata Communication is one stocks which looks very good on the charts and also can be a good buying opportunity at current market price or any dip towards the, in a 3 or to 5% decline. So if you look from the relative perspective, the stock has been hitting every time new all-time high and has been forming higher and higher lows. So from a technical perspective, Tatacom is the one that should be of course a buying candidate. On the level front, we are expecting a up move towards 1950 first, and then about 2100 is the levels what we are working as of now with Tata Communication.
All right, and Rohan, what would you be keeping on your radar in terms of stocks for the rest of the week? Any recommendations for our viewers?
So yes, we have three recommendations. That is two on buy side and one on sell side. The first one on the bet is Indus Tower. So a long can be created at the current market price, keeping a stop below 242. The upside target can be 268 and then 280. The second stock is on the sell side, that is Ultratech Cement. One can look to go short in, one can look to go long in 9500 put for the upside target of 200, and the stop loss can be placed below 80. The last stock we have is Kotak Bank. The private bank has been, maintaining its uh, uh, you can say not falling much despite the correction in the market. So Kotak Bank is one stock which is doing quite well comparatively to the other banks. So this the one stock can be look out for. The upside target can be kept as 1830 to 1850, and the stop loss can be placed below 7.
All right, those were the recommendations coming in from Rohan. Last word from you, Gaurang. Do you expect this correction to intensify or deepen from here? Do you expect the index to shed some more weight, perhaps towards 21,400 or 300 or thereabouts?
Well, if it does go there, I'll be buying truckload of, I would be advising rather because of compliance, I won't be able to buy directly, but I would advise investors to buy truckload of stocks which are fundamentally sound. And, the correction will come in quantum is very difficult to say. News flows will create an overhang. And not to forget, I'm again repeating myself, second largest phase of election going up, starting from 19th of April, going up to 1st of June. 4th of June, we'll have the outcome. I think we need to fasten our seatbelts. If you are a short to medium term investor, if you don't have the risk appetite, Nandita, whatever profits, take it home, sit back on the sideline, come back to the market, post the government is in place. Maybe at that time you will be buying 5, 10, 15% higher. If not, stay invested. If you have the risk appetite, you will get plethora of opportunities between now and 4th of June to cherry pick some of your investment idea and you will get a good bargain over there.
It looks like Gaurang is already ready with his list for the fire sale that could play out on the last street. But with that, gentlemen, thanks a lot for taking out time and joining in this afternoon and sharing your thoughts with us. Always a pleasure chatting with you guys.
Thank you.
Well, with that, we've come to the end of this edition of Closing Bell. We saw extreme volatility on the street today, from lows of 21,000, 750 or 710 and thereabouts. You saw the Nifty reclaim that 21,900 mark, although we did cool off from the day's high, but we managed to defend the 21,800 mark. So, of course, from me and the entire team, thanks a lot for tuning in and watching this show. But come back and join in tomorrow morning on opening bell. We'll have a big market voice, Sushil Kedia, joining in and sharing his thoughts with us. You can't afford to miss that. But stay tuned to Moneycontrol for all your other news and updates, and have a great evening.